Hi, I'm Ben Reppond. Today is July 26, 2023. Welcome to my YouTube broadcast. I'm going to describe the breakdown in the market, what's going on, and I think you'll find this interesting today. This is the view from last Friday, July 21st, and what I do, it's listed on the left side. Of course, the ETFs are in the first column, but the description is in the second column, and then how they performed, these indexes, performed this last week are in yellow, and how they are year to date is in pink. And then to the right of that, the far right, are where are those indexes relative to their 20, 50, 100, and 200-day moving averages. And you can see the top five are equities, and the bottom one is bonds, long-term government bonds. Of the top six are all above all moving averages. Pretty interesting. We haven't seen that very much, but that's how positive the market is right now. And then you can see where they are year to date. I'll kind of focus on that part. Starting with the NASDAQ and the S&P, those are up 41% and 18%. And then we go down, developed markets up 12, small cap up 11, and then it drops on down below that. And then the long-term government bond, TLT, is up 2% year to date. And that, of course, has put a drag on 60-40 portfolios, or bonds or bond funds like that have put a drag on portfolios. When you break the market down into the S&P down into the 11 sectors, this is what that looks like. Again, nearly everything is above all moving averages. Very interesting. Only two are not above the 200-day moving average. Everything else is positive, above the moving averages. So looking at the year-to-date, you can see that the technology is up 41%, consumer discretionary up 32%, and then it drops way down to industrials up 11%, retail up 9%, etc. And then the last two sectors, which is telecommunication and energy, are negative year to date. So that positive view you can see here with the S&P 500. This is an 18-month chart, a weekly chart, and one move equals 1 week. So you can see from its low in October until today, you can see how positive the market is. Very few dips, a few dips, but not very many, and quite a bit above its 20-period moving average. Another 18-month chart. This is a relative strength chart showing the growth part of the S&P 500 compared to the value part. The growth stocks would be companies like Google, Apple, Microsoft, Facebook, etc. Those are, that's the numerator. Value stocks are the denominator. Companies like Ford Motor Company and Boeing and Johnson & Johnson, etc. Those would be value companies. So when value is in favor as the denominator, that's going to cause that line to decline. When growth is in favor, it would go up. So you can see from the beginning of the year, I put in the black line, generally speaking, that has been in an upward direction. But for the last 2 or 3 weeks, you can see that actually value has been in favor over growth. This is also a relative strength chart showing the large companies, the S&P 500 being the 500 largest, as the numerator, and the smallest, the 2,000 smallest companies, Russell 2000, as the denominator, and that's referenced by the ETF IWM. So when it goes up, that favors large cap. When it comes down, it favors small cap. And you can see it's gone up a lot, favoring a large cap, but now you can see recently it's starting to come back down, and that's starting to favor small cap relative to large cap. So small cap is now starting to perform a little better. This is not a relative strength chart. This is an absolute chart. This is TLT, the 20-year government long-term bond, and that you can see since December has gone sideways and maybe slightly downward, gone nowhere for the last 7 months. So I don't know the future direction, but I can tell you it's not going anywhere right now. And of course that puts a drag on 60-40 portfolios. The dollar has weakened since October. I believe that had a lot to do with the oil deal that they did with the oil-producing countries and China, and bypassing the U.S. dollar. And so the dollar has been weakened since that time, and you can see that referenced primarily by the direction of the black arrow. Gold has been moving up for the last 8 months, and generally speaking, and had another positive week slightly, and again it's above its 200 period moving average. Silver, similar to gold, has been generally speaking going up, but like in most periods, it is more volatile. It goes up and down more, but generally speaking, it's been moving in a similar upward direction. The relative difference between silver and gold is this is a 12-month chart, a lot of just up and down. You can see when it goes up, that favors silver. When it goes down, that favors gold. I would not say there is a particular direction here, but it's interesting to see the relative difference between the two. Bitcoin, generally speaking, has gone up since the first of the year and has recently been declining. We have a Bitcoin model. It's a managed crypto model, and we've been in cash for a while. We went up, and then it went back down a little, and so then we went to cash, and that's where we are right now. But generally speaking, Bitcoin is starting to show some strength. Volatility index, generally speaking, has gone down. Volatility goes down when the equity market tends to go up. So it's following exactly what's going on with equities. Asbury Research, this is the Asbury 6 metrics, and they have now turned all positive. So again, matching the market. Market is generally looks like it wants to go up from here. I don't know how long or how far, but the metrics are saying it's positive at least for now. This is a cross-asset relative performance chart, relative performance, and there are none that cover the 3 time periods, the weekly, the monthly, and quarterly view in equities. In bonds, the bottom section, fixed income bonds, corporate bonds are more favored than government bonds in all 3 time periods. And the high yield is doing better than high quality being government bonds. And the short-term bonds are performing better than long-term bonds. The U.S. versus the world, only 2 countries, Peru and Brazil, have shown enough strength to get a green box for the weekly, monthly, and quarterly. Everything else is either kind of sideways, not really moving in a particular direction. That may slightly favor U.S. or slightly favor another country, but not enough of a direction to get a green box. But Peru and Brazil are the exceptions. Okay, gold and silver. From last Friday, the spot price of gold was $19.70 per ounce. That's up 0.5% for the week compared to the previous Friday. Silver, 24.70, down 1.2% from the previous week. And the gold-silver ratio, gold being numerator, silver denominator, favors gold 80-1, which that is it indicates that silver is a better value with that kind of ratio. The monster box, if you want to buy a monster box of silver, this is what it would cost you approximately. This is $13,465. We've seen this number up around 14,000. We've seen it down around 12. Right now it's 13,465. This includes a $2.23 per ounce markup over spot, and that is the same as it was a week ago. And when you put the markup on top of the spot price for 500 monster box, that's $26.93, and per round is $27.43 when you get a tube of 20. And the source of this information is my son, who is in that business, and those are his prices. Bad news. If you continue to spend what you can't afford, you run the risk of being elected to Congress. Thank you for watching. If you have any questions or comments, leave them in the comments section below. Thank you.